Good morning, everyone. Today we will talk about the income statement. So first, I will introduce what is income statement. Of course, since what I have already introduced, it is kind of like something in IGCSE accounting. Of course, all accountants need to have the basic knowledge, or they need to know how to prepare it, and it belongs to the financial statements. So what is also financial statements? It is two statements that you need to prepare. At the end of that year. Or more exactly, at the end of that financial year. Okay. So what financial statement include? It include the income statement. And also the statement of financial position. So actually it includes two statements, income statement and statement of financial position. Okay, sorry guys. I need to close the window. It's a bit, noisy. So now, after we have some basic knowledge of it, so we will directly open how to prepare it. So first, the income statement actually, I would say, have two columns. Not two columns, but two parts. First thing is we need to calculate the gross profit, which means you have, the sales, right? But in accounting, we call it revenue. We have the revenue. And then we calculate the cost of sales. And then we can get gross profit. Yes, but then we can get, what can I say, like, we can get the profit or loss for the year at the end. Why we can get this? We use the gross profit, add income less expenses, we can get the figure. So these are like formula. So these formula are also really important. But first we need to know, how can we calculate sales? Oh, no, the starting. We need to know how to start the financial statements, the income statement. First, we need to calculate the sale of the year. So how can we calculate the sale of the year? It is revenue minus sales returns. It is easy to understand because we need to calculate the true sales. So we can get a figure here. And what I have said is cost of sales. So what is cost of sales? So it means how much worth of goods have we been sold during the financial year. So how can we calculate? First, it is opening inventory. So please assume opening inventory. You have a stock of kind of like that $5,000 in the beginning of the year, and we have closing inventory, right? We have $2,500. So we can see, so you can make some sense on looking those two parts. It is because during the financial year, not only did we purchase things, but also we have sale 500 worth of stock. So it is easy to calculate how much worth of goods have been sold. It is straightforward, just opening inventory minus closing inventory. But of course, just like what I have mentioned, here is purchase. And you say purchase isn't that straightforward. We can just, calculate the purchase from, of course, all figure here are from the trail balance. You know what? All from trail balance. It is really important. You just directly quote the figure into your statement. So we need to, of course, during the CIE exams, you can ensure that all of the figures are correct from the trail balance. Only you made mistakes, of course, just joking. And first, we know the trail balance, but purchase isn't that easy to be calculated. Purchase, we have what? First, we have real amount of purchase, right? It is net purchases, of course. But we have purchase return rights. Sorry. That's so awkward. We have purchases returns. And we have carriage. So we show plus. Carriage inward. It also is called kind of like net purchase and drawings. But this we need to pay attention, because it is not kind of like normal drawing. It's drawing for goods. If you see any kind of drawings in the trail balance, I would say, if you see any kind of things in the trail balance, the drawing is cash drawing. Okay, it is cash drawing. So we do not use that figure. We use the figure at the end of, not even below the income statements, drawings for kind of like goods. So it will be clearly listed, and we just use that figure. Okay, so we have idea of how to calculate cost of sales. That is pretty decent. And then I think we can get started. So how can we prepare the income statement? Just I will use the format. First, we need to have some sense of the format. Please wait a moment. Yes. They should hide. I don't think so. Okay. Wait a moment. I'll use the arrow to to place it instead of the lines, because I don't think there are straight lines. It will be a bit awkward. Okay, so actually, what we have here is, wait a moment, 3 columns. Here, no, sorry. Here, and here. Oh. Alright, leave it there. Okay, so first, we shall calculate, so just like what I've said, the revenue. The revenue here, we extract some amounts, kind of like amounts here. Oh no. Yeah. So first we place it here. But also we have said we need to less. We just put a bracket. Sales returns. we extract here. Okay, so now we end up with a line. We can get a figure. Use this figure. Oh, I think I have an idea. I will use two figures, but not XXX. That will not be helpful. If you want to understand, yeah, great. So that's how I use. Sales returns, I assume it is 5,000, so we can get a figure here. Right, correct. So now what we need to do is we have the net sale. We need to calculate the cost of sales. So we have a heading here, less cost of sales. So we have already introduced. Inventory started as a separate thing. Oh, no, inventory, not investment, what I am thinking of. Inventory. This is opening. Oh, God, what I am doing? Opening inventory. Have here. Opening inventory, it should be what? Like, kind of like, it is pretty normal to have a 10,000 opening inventory. Yeah, I think so. So, during the year, we have net purchase ad. So, purchases. Please ensure that this exists as a separate thing, not just we have the purchases here. No, for purchases, we record it at this column. Okay, so those details we record here. Purchases, it is easy to normal to find this figure. Yeah, and we have the carriaging word. We need to also plus it right here. We need to have also a figure here. And probably, yes. And also we have purchases returns. Kind of like 3,000, of course. And goods for own use. We can write what? We can write drawings of goods here. Also, of course, also kind of like 3,000. Okay, so now we have the full details here. So we need to draw a line and get a figure here. So first we have 50,000 and 1,000 minus 3,000 minus 3,000. It is kind of like easy as for me. It is 45,000, right? Yeah, that's great. So now we have opening inventory, add purchases, so we get amount here. It is opening inventory, it is actually, but we don't write here the plus here. So it is, oh no. Okay. So we just add those two figures. No, this is not a line. I just show you to add what. Sorry. Yes, 10,000 at 45,000. So we can get the figure 55,000. But just like what I have already said, we have closing inventory. That will turns out to be the cost of sales. But I assume this is the closing inventory. They are 20,000. So at last, we have a figure here. It's 35,000. So during this financial year, we had what? Yes, we had what? We had the actually cost of sales, 35,000. We include what? We include, the first. Of course, the basic cost Yes, and also like some transportation like carrying inwards. Remember, if we calculate sales, we only calculate carriage inwards because this is some like kind of items we need to bring to our business, but we do not calculate carriage outwards. That is something belongs to the next part. Okay, we get the 35,000 as our closing inventory. And then we minus this and this. Right, we got total sales, total revenue, net revenue, and we minus the less cost of sales. We can got a figure 60,000 here. So this is what? This is gross profit. But if we get a negative figure here, we just simply write it to gross loss. Okay, so this is the statement prepared. Like we have done 50% of income statement. Really straightforward, yes. So I don't think I have much space, so I just simply change the page, right? Let me draw those signs. Oh, what I'm doing. Actually, we can have those figure here. Great. No, this is not great. Oh, good. Okay, still 3 columns. We get a figure gross profit here. From where we can get gross profit? We get a gross profit at the last column. It's 60,000. So now what we need to do is add income less expenses. So those items we can find directly in the in the what? Those amount we can find it really straightforward in the like question the trail balance provided. So I will list some really common items of first income. So what is income? If you want to know it from like really seriously from the concept, it is kind of like things that will boost your not assets but owner's equity. For example, those income. Yes, but if you want to have some simple or straightforward technique, it is easy. I will tell you. So it is really easy to find some simple technique of how to calculate it. If we see those items on the credit side of a trail balance, then income are all credit side. What? Because income are debits in the accounts, so it is credit in the trail balance. So anything credit is income. But not all the things every income is credited, but not things credited are all income. For example, sales are credited, but sales we have already recorded as revenue at the beginning. Yes, and also purchase return. So we just seek for income. So it is common to see discount discount received. So where shall we have those figure? For discount received, we can simply write on the second column, for example, 1,000. And don't forget, here we need to write a bracket. Yes, every amount you need to deduct, you need to give them a bracket. Here, here. But for the expenses, you just need to have a bracket for the total. So I will still doing this. A rent receivable. If there is a single word called rent, then it is kind of like expense. You pay rent, but if it is rent receivable, that is something you received. Assume 10 grand. Commission receivable. This is easy. Assume 10 grand. So it is a decrease. Oh, we should not use those since decrease. Excuse me. Decrease in provision for doubtful debts. If you do not have any make any sense of what is provision for doubtful debts and why it is the reducing it is called income, because provision for doubtful debts is like I would say for this financial year you think like $500 will not be received from your customer because maybe he is simply being. Of course, the worst situation is that, but in some situations, like he do not have the ability to repay you those things, or like kind of like you have this owner check every time. So this amount you have estimated, but you actually get the correct figure in the next financial year. You see it is 350, but you have already assumed it is 500. So you have the difference of $250, and those figure you can simply seen as income. So we have just like what I said, 250, right? Profits on disposal. Oh, you may see this term really, it is really easy to see, but profit on disposal, if you get profit, is not easy to see because, like, you will charge depreciation every year, but so what kind of things can get a profit on disposal? Like those famous basketball stars or sports stars like shoes. These are, well, unprofit, of course. But if you think, oh, I'm a normal people, like I used this iPad for 5 years, so can I sold for the same figure of money? It is correct, but for only one situation. That is, the inflation rate is really high. Like if there is iPad in the Weimar Republic, kind of like that times, then I maybe will get even higher amounts of those being repaid, but the actual value will decrease. So we do not like use those extreme value. So we can have profit on disposal, and if we have investments, we can have interest on investments. That also will be kind of like 500. If we save money in bank, it is also acceptable. So now what we need to do is get a figure here. So let me calculate. This is the figure. 22,350. Let me have a double check, right? Yeah, correct. So we add income. So now the figure will be 82,350. So now we need to less expense. Expense is also straightforward. Just like what I've said, rent expense 10 grand. Carriage outwards. Yeah, the other carriage we recorded here, carriage outwards, because it is kind of like expense you deliver goods to your customer. Record here. Also 10,000. It may be a bit not realistic, so I will try to be realistic. Uh, wait a moment. What I am doing? Not good. I will leave the one here. 1,000, I assume. Okay. So also we have electricity, those bills you need to have. This can be a bit more. Alright. Irrecoverable debts. Bad debts. No, this is not bad debts. It is just irrecoverable. 1 grand. Increase. The opposite of this one. Make some sense? I'll write PFDD, provision for doubtful debt. 1 grand. Loss on disposal. What? 1 grand on disposal. Depreciation. This may be a huge amount of money. We follow those principles. We have 10 grand. So now we have listed all common expenses and income. So we need to have a figure here. But since it is, you see, less. So we need to have a bracket here. Let me, simple mathematics. Those are 34 grand. Okay, so we just minus those two figures. Okay, correct. This is the correct figure. But you see, I say but. We have what? Let me see the figure. 48,250. You see, I write profit, but it is not true. It is profit from operation. More clearly, it is a profit before interest and tax. Because a business simply gets some money from owner's equity and loan. So we need to have interest on loan. Why it is listed here? You see interest on loan, you say, so why it is not expense? No, it is because it is your business interest. It is not like some operations, daily operations. And of course, tax. You see, tax is also kind of like expense. It is not. It is the tax charged on your profit. So only if you can get the profit before it, they can charge tax. So we can have those two amounts. Simply record it at this column, like 10 grand for interest, 10 grand for tax. So we can have 28,250. And now, correct, it is profit. Oh, prot, what is this? Profit for the year. So we get this figure. But if this figure is negative, we just simply loss for the year. So now we have completed income statements, and how to complete it, how to do it, how to prepare it. And thank you guys for listening. Have a nice day, and please support our channel. Thanks.